Welcome back. Well, the bank Nifty has now inched into the green as we speak, or just about flattened out. So there has been an intraday recovery which has taken place for our markets. Whether it sustains, whether we build on that, let's see how the European markets open. That will also throw up some cues for us. But as of now, we do have a big cue to reckon with. Earnings season kicks off for Q2 FY23 today with TCS. Nimesh has collated key data points to tell us what we can expect from this earnings season. Nimesh, over to you.
It's going to be very, very hectic for the next 4 weeks for us as we look at the earnings season. And, look at the calendar for next week itself. It's going to be a hectic next week to start with TCS on October 10th. Then we have Delta on October 11th, HCL Tech and Wipro, both from IT on October 12th. We have Infosys and Mindtree on 13th. We have Bajaj Auto and Tata Elxsi on 14th. And even on a Saturday, it's going to be very hectic with Avenue Supermart, HDFC Bank, ICICI Pru Life and L&T Infotech all reporting on the 15th. So it's going to be quite hectic to start with the next week. Now, I've just looked at the overall earnings preview of a lot of the brokerages. So here's the summary of Q2. The potential leaders are going to come from BFSI, consumers and autos. They are expected to report strong numbers, whereas laggards is going to be from metals and oil and gas. They are going to disappoint. So I've looked at the individual sectors now. The first is technology, because they are going to start first. It's going to be a mixed bag for technology, but it's not going to have a big impact on the FY23 and FY24 EPS estimates. That's the overall consensus. The growth may slow down in FY24 estimates, but it appears to be priced in, so there's not going to be a big scare. However, the risk is the recession, the deep recession in US and Europe. So that's for the IT sector. Now coming to the banks, because that's a big sector. Within the banking sector, I think the big theme is the credit growth and NIMs are showing resilience and liabilities are gaining focus. But the biggest surprise in terms of positive surprise will come in the private banks. The PAT growth, the analysts are expecting a 53% growth YOY. So that's on private banks. On NBFCs, the growth is picking up. So even there's going to be no big negative surprise. Even for housing finance companies, there's going to be a strong individual disbursement for the HFC. So that's going to be clean. And for the insurance companies, there's going to be some moderation in terms of the VNB margins compared to the Q1. So there's going to be a small disappointment on the insurance. Coming to the auto sector now, again, that's going to be a big sector and it's going to outperform. So sequentially, it's going to be an improvement in the margins. Q3 is going to be the best quarter in terms of recovery from the input cost, which was hitting them. So CLS has put out a note, and they believe that in Q2, the biggest EBITDA, highest EBITDA margins will come for Ashok Leyland and Maruti. So they too are going to outperform as far as the autos are concerned. Now coming to the cement sector, it's going to be a washout sector for cement in Q2, but that looks like it's in the price. So the profitability will be at a multi-quarter low in Q2 for most of the cement companies. In fact, Street is expecting the EBITDA per ton to fall by 50% YOY in Q2. Expect margins to recover only from Q3. But again, it looks like to some extent it's in the price. Now coming to the telecom sector, it looks like it's a stable quarter for telecom, limited surprises. 5G is going to be the next big trigger. For Bharti Airtel, it's going to be a slight increase in the ARPU. But for Vodafone India and Indus Tower, that's going to be a tepid quarter. So that's going to be for telecom. Now looking at the paint sector, that's going to again report a very strong quarter according to the brokerage. So demand is quite buoyant. There is a festive cheer as well. And Macquarie believes that Asian Paints is going to lead the paint sector. So that's with the paints preview. If you look at the fintech companies, now I picked up for a specific reason. It's going to be a steady quarter for fintech companies. Paytm across the board, there's going to be a good momentum. For PB Fintech, again, sustained growth. But for all these companies, the lock-in opens in November, and that's going to be a big overhang for all these stocks. So fintech largely on the lock-in overhang will be key to watch out. So as I said, it's going to be a mixed quarter for Q2. No big surprises, but I guess individual sectors will be very important as far as reactions are concerned.
And we kickstart with IT later in the evening with TCS, and the stock is going in with some caution, definitely. Manoj Bahety, the founder at Carnelian Asset Advisors, joins us now to talk about that. Manoj, good afternoon. From a market standpoint, I wanted to understand from you, how important are these earnings in the context that, a lot of sectors in any case have been under pressure ahead of earnings, so expectations are not too high. But you tell us, how are you going into it?
Hi. Good afternoon, Sonia. Generally, we don't look at quarterly earnings that closely, as I mentioned to you. But if I look specifically for this quarter earning, I think banks and financials should do very well. I think there are three tailwinds for banks specifically. The credit growth is coming back. We can see NIM expansion because the interest rate on loans have started going up and the interest rate on liabilities yet to catch up. That is number two. And credit cost for banks will continue to be benign. So these three tailwinds will continue to support banks for this quarter as well as for next 2-3 years. We see strong tailwinds for entire banking sector growth. And specifically in the banks, we continue to like private sector banks. Few of the PSU banks also should do well, and NBFCs are going to catch up. So this is our take on the banking sector. Secondly, coming to automobile sector, I think automobile sector is going to have good time after almost 2-3 years of lull. Commodity prices are coming to their favor. Commodity prices are correcting. The demand scenario is very robust. Most of the automobile players, especially PV side, they are having a very strong order book. And now with chip supply issues behind, we see that the supply side will also get sorted. So we expect a good EBITDA margin boost also for automobile players, and even auto ancillaries will do really well. This quarter as well as I would say next 1-2 years, there is going to be good tailwind for automobile sector.
Right.
And yeah.
Right. Take that point, on banks as well as auto. Wanted to understand your thoughts on the IT space in particular, because that's the second largest weight on the index after the banking index. Yeah. And, the index the IT index itself has underperformed this year. It's down almost 30% as against the Nifty, which is just marginally negative. We have all the IT earnings coming this time around this week itself. Your thoughts on what is to be expected and how much can that move the needle for the market?
See, IT sector, if I look, definitely there are structural headwinds right now. And I would say not structural headwinds, it's a medium-term headwind because nobody knows that how the demand scenario in US and Europe is going to pan out. But talking about specifically about this quarter, I think IT sector should continue to report decent dollar-denominated growth. Their constant currency growth may take some beating because of the cross-currency headwinds. And margin pressure, I think this quarter should be the last in terms of margin pressures. Next quarter onward, we may start seeing margin pressure coming down because I think the attrition issue which the IT sector was facing almost for last 1 year, it is going to subside. So structurally, we are bullish on IT sector because the kind of digitization theme or the kind of cloud migration, all that started, it will continue. But I would say that in terms of execution of the order book, it may happen that it may get delayed. So to that extent, the growth trajectory of few of the IT companies may get delayed. But in terms of long term, I would say the structural trend specifically for Indian IT companies remains intact.
Okay. The other factor which a lot of people will be watching closely is the sequential improvement in margins, which will be aided by raw materials or input costs softening. What is your sense in terms of how much margins could benefit, and in which sectors more specifically would you expect the most improvement?
In fact, I would say automobile is one of the sector which this quarter we may not see a full impact of the commodity price correction, but next quarter I would see that this impact will be much more visible. Consumer durable sector is one sector which one should watch. Even FMCG sector which were grappling with high commodity prices, like recently we have seen that HUL has even taken a cut in some of their products. And that is nothing but outcome of correction in the commodity prices. So I would say that these three sectors should benefit from correction in commodity prices.
Okay, and before we let you go, apart from earnings season, that of course is the topic of the moment, any other big themes that you like that stand out for you from an investment standpoint over the next, say, 6 to 12 months?
I would say I would change, instead of next 6 to 12 months, I would say for next 2 to 3 years, we are very bullish on entire manufacturing sector in India. Means the kind of reforms and the kind of global scenario which is favorable for India, China plus one, along with the domestic reforms and PLI incentives which has been announced by government. So entire manufacturing sector, whether it is APIs, whether it is auto ancillaries, chemicals. So on the entire manufacturing space, we are very, very positive. And from long-term perspective, we are positive on IT and digitization theme also.
Okay, all right. We're going to leave it on that note. Thanks very much for joining in and speaking with us and giving us your sense in terms of what we can expect from the earnings season. And, Manglam, we were having a chat with Poly Medicure, and he did mention that China plus one factor would be probably one of the big growth drivers for them going forward, something that Manoj mentioned as well. Time for a quick break. But up next, Sudeep Shah of SBI Securities will join in with some trading strategies and what he would strategize and recommend today. Stay tuned.